What's up, everybody? We have a foreign currency accounting quiz. This is ASC 830, and there's going to be 10 questions, and you will have 15 seconds to answer each individual question, and I will give you the answer and an explanation, and I want to know how many you got correct once you finish the quiz. Did you get 10 right? Did you get 8 right? Let me know. Comment below how many you got correct. Question number 1. What would be considered the functional currency of a foreign entity? A, currency of the parent holding company. B, local currency. C, currency it transacts in and keeps its accounting records. D, the currency of the client. The answer is C. It's the currency it transacts in and keeps its accounting records in. Per ASC 830-10-20, an entity's functional currency is the currency of the primary economic environment in which the entity transacts in and keeps its accounting records. The functional currency, for the most part, should be obvious, but GAAP does have some official tests to determine the functional currency if it is not obvious. Question number 2. What is the primary standard that governs currency translation? A, ASC 810, B, ASC 820, C, ASC 830, or D, ASC 720? The answer is C, ASC 830. ASC 830 provides accounting and reporting guidance for determining the functional currency, converting foreign currency transactions, and translating the financial statements into the reporting currency. That's where you take the underlying subsidiary, the underlying foreign subsidiary, and convert it into the parent's reporting currency. Question number 3. What would be the reporting currency when preparing financial statements? A, the currency the financial statements are prepared in. B, the currency an entity transacts in and keeps its accounting records in. C, the spot rate at the time of the transaction. Or D, the local currency of the foreign subsidiary. The answer is A, the currency the financial statements are prepared in. The reporting currency is the currency a parent, consolidating, and or holding company prepares its financial statements in. The foreign subsidiary will need to be translated into the parent's currency when consolidated into one economic entity when you're doing consolidation accounting. Question number 4. Investments in foreign subsidiaries require a currency translation measurement adjustment. Where is the currency translation adjustment recorded to? A, FX gain or loss on income statement. B, other comprehensive income. C, asset or liability, depending on the translation. Or D, adjustment to retained earnings. The answer is B, other comprehensive income. In order to eliminate and ensure the investment in foreign subsidiary on a parent's books equals the translated equity of the foreign subsidiary, a foreign currency translation adjustment is made through OCI, other comprehensive income, per ASC 830-30-45-12 to be very specific. This is the difference between the investment in subsidiary on the parent's books and the translated equity on the foreign subsidiary's books. If you've gotten any value out of this video so far, please smash that like button and consider subscribing. Also, I'm going to link in the description a video that will go along with this quiz. It'll give you all the answers to the quiz that you're currently taking and give you examples on how to properly translate currency per ASC 830. Question number 5. Under ASC 830-10-55-5, which of the following economic factors should not be considered individually and collectively when determining a foreign operations functional currency? A, cash flow, B, expenses, C, financing, D, exchange rates. The answer is D, exchange rates. Per ASC 830-10-55-5, the following economic factors should be considered individually and collectively when determining a foreign operations functional currency: the cash flow, the market that you're selling in, financing, the selling price, expenses, intercompany transactions. If it's not obvious, these are the factors you're going to look at to make the determination of what that foreign entity's functional currency is. Question number 6. ASC 830-20-35 states transaction gains or losses should be reflected on the A, income statement, B, balance sheet, C, statement of other comprehensive income, or D, adjustment to retained earnings. The answer is A, income statement. Transaction gains and losses should be included on the income statement, since the transaction gains and losses on remeasurement affect functional currency cash flows. Question number 7. What is the local currency? A, always the currency of the parent company. B, the currency the company hedges its transactions in. C, the currency the financials are prepared in. Or D, the primary currency in the country. The answer is D, the primary currency in the country. The local currency is the primary currency in the country. For example, most European countries are going to use the euro. That would be the primary local currency. Another example would be in the UK, they're going to use the British pound. United States, they're going to use the US dollar. That will be the local currency. Question number 8. A foreign subsidiary's assets and liabilities will be translated at what currency rate? A, the current rate, B, the historical rate, C, the weighted average rate, or D, it's just not converted. The answer is A, the current rate. Assets and liabilities are translated at the current rate at the end of the reporting period. An example would be Myers Company, U.S. parent, on June 30th, 2026. The Myers Company subsidiary, UK Ltd, has a rent payable of £1,000. The current rate, the GBP to USD, as of June 30, 2026, is 1.33. So the translation would take the £1,000 times current rate for the reporting period to get $1,330 of US dollars translated from British pounds. Question number 9. What is the USD currency translation for June rent expense as of June 30, 2026 for Elm Company Limited? The rent at 1428 North Genesee Avenue equals 1,000 British pounds. The average GBP to USD for June 2026 was 1.3. The historical GBP to USD at the time of the lease, January 2026, was 1.25. What is the translation? A, $1,000. B, $1,250. C, $1,152. Or D, $1,300. The answer is D, $1,300. Rent at 1428 North Genesee Avenue was 1,000 British pounds. The average foreign currency GBP to USD rate for June 2026 was 1.3. The translated rent expense would then be 1,000 pounds times 1.3 to get $1,300 US dollars. You want to translate at the weighted average foreign currency rate for expenses. All right, last question. Question number 10. Hope you made it this far. What is the foreign currency loss in the below scenario, assuming this is in the normal course of business and not considered to be a long-term intercompany balance between the entities? Voorhees Company UK Ltd, as of June 30, 2026, has an intercompany payable of £100,000. The current rate GBP to USD as of June 30, 2026 is 1.24. Voorhees Company US Holdings Incorporated as of June 30, 2026 in US dollars has an intercompany receivable of $125,000. What is the loss when you translate the UK Ltd foreign subsidiary? A, $1,000. B, $1,250. C, $1,240, or D, $25,000. The answer is A. You have a $1,000 loss. Let's look at the math. The remeasurement of the intercompany balance, you take your intercompany payable to the USD holding company is going to be 1,000 pounds times 1.24, the current rate, and you have a translated balance of $124,000. Now, the intercompany receivable on the parent is $125,000. And with consolidation, we're going to need to eliminate both sides of the equation. So there's a $1,000 foreign currency loss in this situation. So you got to reduce your receivable down $1,000. So $124,000 minus $125,000 is a $1,000 loss. All right, that's our ASC 830 currency translation quiz. Hope you learned something from this quiz. Let me know in the comments below how many you got correct, and I will see you in the next video. Take care and goodbye.